In today's video, we are going to talk about a penny stock. It's priced around 23 and is a large cap stock with very good fundamentals. It's also very low on price to earning ratio. It has come down and is very cheap right now. Also, not to mention the dividend yield that this stock gives. We are not investment advisors, and this is not an investment advice, but this stock is a good buy at this price. Company has been giving ROCA of 5% and above 13% of ROE. Over the timeline, this stock is ignored and we feel there is major upside to this stock. It's quite possible you have ignored this stock too. Hello friends. Welcome to our investments channel. Investing with PS. This video is not an investment advice. Remember to press thumbs up on this video, and if you are new to our channel you can subscribe our channel for more such videos. Let's look at how the stock has performed over the time. Last week stock pulled back about 3% and is at 23 now. Recently stock peaked on 25 plus in November, first week before the correction pulled back. 52-week low of this stock is 20. Over 1 year, as it stands, stock has given negative 6% return. At the peak it was big again. Stock is recently went public, hence no data for 5 years. This stock shows great potential with major upside in medium to long term. Stock's dividend is promising too. Company name is Indian Railway Finance Corporation. IRFC is the financing arm of Indian Railways. It borrows funds from the financial markets to purchase assets which are then leased out to the Indian Railways. Let's look at summary of how the company is doing. Market cap of 30,000 crore. Price to earning is around 5, which is low compared to stability this company provides and is in the futuristic growing sector. This is low due to this being government promoted company. Recent ROCA is almost 5% and ROA is also at 13%. Which is good for the business that it is in. We would expect this to improve in near to medium term. Stock returns have been low, but would expect this to grow over the time, with the monopoly business that it is in. Stock is not in overbought zone now, so there won't be immediate selling pressure on the stock in short term. There are no ASM or other flags on this stock right now. Performance quality of the stock has been low, but is stable and shows promising start. Revenue and income growth has been overall historically okay. Stock has shown pullback recently and can be a good stock to invest for long term. Over the last 5 years, revenue has grown at a yearly rate of 16%. It has grown from 9,046 crore to 15,770 crore. During COVID it increased from 11,133 crore to 13,833 crore in 2020. Growth slowed in 2019 but has resurged since and expected to get better results next year. Net income has grown at a yearly rate of 39%. Also during COVID it has grown steadily from 933 crore to 4,416 crore. During COVID it went through 2,254 to 3,692 crore in multifold. Earning per share has grown consistently throughout from 1.43 to 3.66 last year. ROE has been increasing for last 5 years and is at 12.30% in 2021. It had gained from 7.7% to 11.92% during COVID to at 12% now. Also, company has increased market share 10.35% and has remained stable over last 5 years. Current ratio has been at 1105%, which is above industry average. Sales have been consistently around 3,700 crore in last 4 quarters. Looking at annual progression on income statement. Sales have been consistently increasing from 9,000 crore to 15,700 crore. So is EBIT and net profit that's consistently increasing in the preceding quarters. Net cash flow has gone to positive from negative from 2017 at 295 crore. Being a finance company you would expect such cash flow. Let's check out the holdings pattern of this stock for September 21st quarter. Promoter holdings has remained at 86.36%. FIIS holdings have reduced a little to 1.06% in 2021 from 1.44%. It was reduced to almost 0.86% in December 2020. DIIS holdings have also reduced by a percentage to 3.19% from 4.24% last quarter. This might also explain the recent correction in the stock. Overall, the holding patterns is with neutral. Pledged promoter holdings are nil. Number of FI is around 41 and 3 mutual fund scheme holds position in this stock as of now. See the peer comparison. Compared to private finance companies, there is big difference in price to earning and market ratios. Net profit is compared to Bajaj Finance and price to earning is almost 16 times. Price to earning is quite different of 5 to 87 for others to 5 for this company. Debt to equity is low in comparison to other companies. Net profit of IRFC is highest in its peers. IRFC is railway financing arm of Government of India. It's in leasing, lending and borrowing finances for Indian Railways. You can check the details of the company and its operations on the website. It also shows the financials of the company since 2014. Let's check the analysts' expectations from the price and revenue and earnings. There is only one analyst covering this stock, so it should be taken with some reservations and requires more research. One analyst has a buy rating for this stock now. With respect to stock price expectations for next year, high expectation is at 55% at 36.11. Revenue growth expectation for next quarter is negative, which is lower than last 3-year CAGR revenue. That's 5,490 crore. Profit margins are expected to remain on the average of last 5 years. Market has shown correction recently. This company has been generating constant revenue and net consistently for past few years. Let's look at chart of IRFC stock in detail and what would be appropriate strategy for this stock. As you can see, it's at 23 with some pullback recently from its peak of almost 26. RSI at 36 suggests stock may be in oversold zone. It's possible that there may be some more pull down in this market depending on the market condition. Volume is very low, so likely the price will remain low and go sideways. But the stock is looking cheap at this stage, provided company keeps up its revenue growth. Also, the downside seems low. It's already pulled back from 52-week high. There is some volume in July and end October. Stock is near its support of around 23. If it breaks that, there is another support at around 22.35. This stock's fundamentals are good. With government backing it, it should give stable returns and good dividend. It should play good in the coming future. If there is more pull, depending on market condition, I would add more on this stock. But this is definitely a good place to buy some of this stock. Being a large cap, even though it's penny stock, there would be less volatility. This is a safer stock overall, at a very low price. It requires more digging to find out the underneath story in the stock and future plans of government. We love to hear from you. Do share what other stocks would you like to cover and share our analysis. Hope you liked the video. Do share your thoughts. Remember to press on thumbs up and share the video and subscribe our channel for more such analysis. Thank you very much.